He's one of the world's premier real estate investors, and he's here with me at the World Economic Forum in Davos, Switzerland. Barry Sternlicht. Barry, it's been a great time to prospect for real estate deals coming out of the Great Recession. But I have to wonder, is the golden age, let's call it, of distressed investing over?
Yeah, it didn't last very long.
No?
Yeah,
is it over?
It's not over. It's in suspended animation because a lot of the troubles are still stuck in debt that's still owned by banks, and they don't have any particular need to sell it. So when these loans mature, there'll be a mini crisis and there'll be opportunities. But we were very busy last year. We invested a lot of money, and it's slowed down a little bit because I think we're a little nervous about interest rates.
You're nervous about interest rates, but right now conditions in debt markets are unbelievable. I mean, if you look at spreads, yeah, they continue to go down and down and down. How much further can they drop?
For real estate, they continue to drop because they're still historically wide, and there's such a global search for yield, and there's nowhere else to get it. So you're seeing a lot of people play, even in the commercial mortgage-backed markets, existing markets. They're levering the paper, they're expecting spreads to come in even further. And so rates may back up, treasuries may back up, but spreads may come in. It might extend this holiday for a little while.
You know, the search for yield sounds awfully familiar to what we heard in 2006. Do you think we're creating another credit bubble?
Yeah, undoubtedly.
Really?
To some extent. I mean, I think the Treasury should raise short-term rates and give people an alternative to going into high-yielding and high-risking assets without understanding the underlying risk. I don't think it would do much to the U.S. economy if we had 1 or 1.5% short rates. But I do think it would help rebalance what's become almost a frenzy of people looking for yield in property and not understanding that maybe the rents in the office building are actually above market today. So the yield they're buying may go down in the future, and they don't really understand that. So
banks unwilling to take the pain on the one hand, investors searching for yield, potentially creating another credit bubble. It sounds like a pretty toxic mixture. What about, and you talked about the difficulty of finding things to invest in. A few months ago, you told me that the FDIC was the best place to go shopping. Is that the case any longer?
Not really. The FDIC hasn't sold a lot lately, and most of what they're selling is almost...
They sold a bunch of stuff to Colony Capital just the other day.
I won't comment, but the stuff is really small loan balances. That pool is really tiny, and you know, you have to. That's a manufacturing machine. These are very small loans. You got to resolve them. They're not great assets. They're not great quality. You're not going to get lucky. You own a strip center somewhere in a town you've never heard of that's half empty. It's really asset management intensive, and there's not a lot of upside. And you're not going to make multiples of capital. So
where do you go?
We've been buying directly from banks. Some of the regional banks are selling loans, and it's not. I don't think the banks don't have to sell because the regulators aren't giving them any pressure. And so far they've been dead right. I mean, everything has rallied. Stuff you bought at 60 cents is now at 80 or 90 cents, and the bank stocks have held up. So now they can take the hits. Although they're all beginning to look to put out money. So they'd like to refinance the same loan that they had, and as long as rates stay low. And we're working now with a foreign bank where we're going to come in and refinance a loan on a property. We actually have them as the junior note on this property. The foreign bank will only take, let's say, $50 million of exposure. We'll write a $35 million junior note, and then that's how we'll refinance the whole stack. The borrower will put in some money too.
Very great of you to join us here in the Inside Track.